And in our top business story, Dubai Airports maintained its growth trajectory in the second half of 2014 with passenger traffic at Dubai International rising 4.3% in November. That's according to the latest traffic report issued by operator Dubai Airport. Passenger traffic in November 2014 totaled 5.565 million, up 4.3% from 5.337 million passengers recorded in the same month in 2013. Year-to-date traffic rose 5.9% to 63.977 million compared to 60.384 million passengers recorded during the first 11 months of last year. Aircraft movements climbed 10% in November 2014 to 34,690 movements, up from the 31,525 movements recorded in November last year. Year-to-date aircraft movements declined 3.5% to 325,469 movements, down from the 337,121 movements achieved in the first 11 months of 2013. The drop in aircraft movements so far this year has been driven by capacity cuts made during the runway refurbishment program earlier this year. Regionally, Eastern Europe was the fastest-growing region, with passenger traffic rising 54.1% year-on-year in November, spurred on by strong growth from Budapest, Prague and Warsaw. South America increased 15% and Asia, with an increase of 13.8%, also showed good growth during November. Cargo volumes slipped 8% in November 2014 to 205,375 tonnes, down from the 223,195 tonnes recorded in the same month last year. Expanding its suite of emerging market products, the Dubai Gold and Commodities Exchange, the DGCX, has announced the launch of 3 new currency contracts. The new EM currency contracts are for Russian ruble futures, Korean won futures and South African rand futures, and will provide DGCX market participants with additional tools to manage their price risk and exposure to foreign currencies, as well as provide new arbitrage opportunities. With the increasing prominence of these 3 currencies in the emerging markets landscape, the launch of these contracts assumes considerable significance, according to the DGCX. The new currency contracts are cash settled and can be traded Monday through Friday from 8:30 a.m. to 11:30 p.m. Dubai time and are sized at $50,000 with the contract price quoted in US dollars. The new contracts will be cleared by the Dubai Commodities Clearing Corporation, who will safeguard participants against counterparty risks and provide them with centrally cleared products that are a secure alternative to OTC derivative products. The DGCX currently lists 11 derivative products within its currency portfolio. The Dubai Investment Development Agency, Dubai FDI, and the Sharjah Investment and Development Authority, Shuruk, have formed a partnership to conduct joint initiatives and exchange information to attract investment into the UAE. As per the partnership agreement signed between the 2 parties, Dubai FDI and Shuruk will collaborate to identify potential source markets, present the business advantages of the respective emirates to investors abroad, and facilitate their entry into the UAE. Under the agreement, Dubai FDI and Shuruk will explore possibilities for jointly organising exhibitions, roadshows and other events all over the UAE and around the world, with the 2 parties to also support each other in attending similar events abroad. Close on the heels of a major price drop in diesel last week, Emirates National Oil Company, ENOC, has further reduced domestic diesel prices in line with the international decrease in crude oil prices. The discount also follows a similar reduction announced by Emirates General Petroleum Corporation, Emirat, which has lowered diesel prices by 20 fils a litre across all its service stations. In line with this, ENOC will reduce the price of diesel by an additional 20 fils to 3 dirhams 10 per litre, effective from December 30, with a revised price applicable across the entire service station network of ENOC and APCO.